So today the Fed raised their rates. What does that mean for the precious metals market and the stock market? Hello guys, welcome back to my YouTube channel. Today I'm going to be talking about the recent interest rate raises in the US, the Federal Reserve. As most of you would know, the Federal Reserve is the central bank of the United States. So here I've got a coin from the United States, the American Silver Eagle. So that is from the US. So what does the rate rises mean for gold and silver? So I think that when the rate is raised, it raises the cost of borrowing, which means that it's harder to get a hold of loans for a cheaper price. So let's say before you could borrow £100 for 100, you could borrow £100 and had to pay back 100 plus 25p pence in interest. But now the Fed raised it to 105.25. So for every £100 or every $100, you have to pay back $105.25 or £105.25. So that means that the cost of borrowing has gone up, which means that access to money will go down in the economy, which means that consumer demand will go down, which means that company sales go down. Because normally consumers buy products on credit, and normally businesses also buy their stock on credit as well. So like if a stock has to replace, let's say McDonald's has to replace all of the food that it uses, or a supermarket has to replace all of the stock that they have. A lot of businesses rely on loans to do this. So, and another thing is that a lot of the demand is fueled by credit. So if the availability and the cost of borrowing has gone up, it means that consumer demand goes down a lot, which means that the sales of companies will go down. And what that means is the stock price will go down because they're less profitable. So this is why I think if they keep raising the interest rate, it means that the stock market will go down. The US stock market, and also normally what happens in the US also happens in the UK. So whenever the US raise the interest rates, the UK normally raises the interest rates as well. And what happens in the US markets normally happens in the UK markets as well. So if the US stock market crashes, likely the UK stock market will also crash as well. But for gold and silver, because people will panic buy into gold and silver because they're worried about the stock market going down, people are going to be looking for a safe haven asset to put all their money into, because they can see that it's going to be crashing if they keep raising the rates, because the stock price is heavily dependent on the interest rate. The higher the interest rate in the economy, the harder it is for companies to survive, which means that the stock price will go down. So this will cause people to panic buy into gold and silver. Normally when stocks go down, the price of gold goes up. And you can see this in history. In the 1980s, when stocks were crashing in the 1980s, the price of gold went up, and the same in 2008. After 2008, when the stock market was crashing, price of gold was going up relative to the stock market. So silver and gold will go up if the Federal Reserve keep raising their base interest rate, or if the central bank of the Bank of England keep raising their rates, then it will also cause the price of gold to go up as the stock market crashes. So the reason why they're raising interest rates is to control inflation, because as you know, inflation is caused by a rise in consumer product prices, rise in the price of goods and services. So the reason why goods and services rise in price and cause inflation is because of demand, because consumers are demanding the product more. But if demand is reduced because of less access to cheap borrowing, then inflation will be slowed down because there's less demand for the products. So the central banks see changing the interest rate as a way of controlling the inflation rate. As you know, in the US and the UK and Europe, the EU, the interest rate is very high, ranging between the 9% level and the 11% level. I think in the last few months, the UK had 11% inflation, whereas the US had 9% inflation, and the Euro area had 10% inflation. So all of these central banks are gonna be raising their rates to try and bring down the inflation to their target rate, which is like 2%. So by holding gold and silver, you will benefit from this because the price will go up as the stocks crash because of the companies struggling to survive with higher cost of borrowing. So anyway, guys, I hope you learned something from this video, some interesting facts. Another thing to mention is that if the stock market's going down, then it might be worth shorting the stock market. However, it's very risky because normally when you short the stock market, you're using leverage normally, which means that you can lose money as fast as you can make money. So if you're going to short the stock market, I would say to keep your investment to a minimum and don't do it unless you're fully prepared for the risk of losing all your money. Don't invest more than you can afford to lose. Anyway, thanks for watching. Hit the like button and the subscribe button, and I'll see you in the next video.